Hello, everyone. Welcome to the FTX podcast. I have a great guest here with me today, Tushar Jain from Multicoin. Welcome, man.
Hey, Tristan. Great to be here.
Yeah, great to have you. I've had, obviously, your co-founder, Kyle, on here, so it's really good to get the other half of this amazing success story that you guys have had. To kick us off, would you mind giving a little bit of backstory about yourself? Brief introduction?
Sure. Yeah, happy to. I grew up in New York. I studied finance at NYU. That is where I met Kyle. And then we ended up moving down here to Austin, which is where he's from. We worked together for a year at a company that we left, and then we both went on our own entrepreneurial journeys. I founded a company called ePatient Finder, which used patients' medical record data to help them find clinical trial options that their physician may not have been aware of. And Kyle founded a company building on Google Glass for surgeons. Both of those were modest little outcomes, which is another way to say they were basically, not successful. But we learned quite a lot. And in 2017, we came together and we were like, we want to work together again. We're really obsessed with this crypto thing. What should we do? And we realized that crypto was just a new asset class and people didn't know how to think about the asset class. The example that I like to give is value investing and discounted cash flows and all the stuff that Ben Graham talks about was invented, right after equities became a popular asset class. People don't realize, but, like when equities became popular in the 1910s and 20s, like the people didn't know how to think about how to value equity ownership. Like investors just didn't know. They didn't have the heuristics or tools to do that. And we saw that same exact opportunity in crypto. What really highlighted it to us was what we call the token velocity problem. Everyone kept making these systems where they were like, oh yeah, we're going to make a coin and you're going to pay for whatever, good or service using that coin, right? And like coffee coin or Denta coin or, whatever, right? And it was like obvious that that's not how the world is going to work. Like people don't do that. That's just not how money works either. But investors weren't really thinking about it clearly enough. And so we realized that the market really needed that education. And so we thought we were in a really good position to be, big, like loud investors and help educate the market on how to think about these things and give them the heuristics and frameworks to, help make decisions. So we decided to launch Multicoin in May of 2017. We launched on October 1st of 2017, which was a pretty good time to launch for like all of 2-3 months. Then we went through, what was a very, very painful bear market. And, thankfully we just like never had any wavering of conviction. We were here through that whole thing and, that has paid off in a pretty big way.
And a couple questions from that. So the first one, I'm curious, Kyle's been your partner. You guys have found this company together. You guys have worked on things before. Like, what were these components that for you were like, okay, this is somebody I can really work with and build something huge? Like, I'm always curious what gels co-founders together.
Oh, that's an interesting question. So Kyle and I met at college, like we were at NYU for 4 years together. Then when I moved to Austin, we were actually roommates for 4 years as well. So until starting Multicoin. So we knew each other pretty well. And there were a few things that I realized. One was that we disagreed really well. And that's really important because as we talk about, sometimes like our job is to disagree with each other and argue with each other. And you have to do a good job of it because through that disagreement is where you come down to kind of the crux of the issue or the core of what's being debated. I think that was really important. I think the second thing that was really important is just like having a drive to succeed. You need someone who's operating at the same kind of speed as you. Otherwise, partnerships get in trouble when people are on different wavelengths. So that was really critical. And then the third was just we shared a lot of common interests and background and context. Right, we were both obsessed about tech and how the internet was reshaping the economy. We both had studied finance and understood a lot of those primitives and concepts. We were both just interested in a lot of the same ideas that are relevant for crypto. And so having a lot of that context was just critically helpful.
Mm-hmm. And just all that time together just meant trust too, right? Because if you could have a relationship that long, it's just like very trust-based. Is that a big part of it?
Yeah, absolutely. That matters a lot. When you're operating in a space that moves as fast as crypto with all the things going on, like you have to have that implicit level of trust, and that's hard to replicate. It also, leads to some really positive effects, right? Because when you have a single decision maker, I think that can lead to some instability sometimes for a firm, right? Because people are people, right? Like things happen in your life. You're stressed, like something happens, whatever, like you don't feel well, et cetera, right? Like that can affect your output and your decision making. Or you have your own biases and they cloud your judgment on something, right? And that affects your decision making and your output. And I think that if you can have a partnership that works really well, it gives you the stability that having a bonded pair can bring you, but you have to make sure that that partnership can last. Otherwise, the tensions of the partnership become not worth the cost of it. But the good news is, we already had so many years of history that it made it easier for us to make that decision.
Mm, totally. And another thing I was curious about from your kind of telling the beginning of the origin story is what gave you the interest within the blockchain space? Like, was it just that this was an asset class that people didn't know how to classify and you had a sense on how to, or were there other intrinsic aspects of it that called to you?
Oh, there were several. The asset class thing that I was talking about was more about why we decided to start an investment firm rather than a project. But I was fascinated by just the new emergent coordination mechanisms that crypto enabled, right? I think there's two parts of crypto. There's money crypto and there's tech crypto. And I'm really into the tech part of crypto, right? Like when I saw Bitcoin for the first time in 2013, it was all about this hard money stuff. And I was like, okay, like this is cool. It's valuable. I don't mean to demean it, but like, that's just not what I'm personally interested in. But then when I saw Ethereum in 2016, I got a lot more excited because I was like, oh, this is a way that we can create internet native organizations. And, this is the way that the economy is going to scale to, unprecedented scale, right? Like right now in the United States, or even, in the United States, there's like 3 employers that have 1 million people or more working for them, right? And that's like the Army, the Navy, and the like Walmart, or I forget exactly who those 3 are, but like those are the only 3 that can coordinate human beings on that large of a scale. With blockchain, we can do that really easily, actually, and get 1 million people coordinating at just permissionlessly all around the world. And so that is what really caught my attention, was how do we create new emergent organizations that are truly internet native.
Yeah, that makes a lot of sense. It's really interesting. And actually, could you go a little bit more into this money crypto and tech crypto? I mean, I think it describes it quite well, but I'd love to hear that fleshed out a bit.
Sure. Money crypto is, usually talking about things like the inflation rate and how the Fed keeps printing money, and fiat is not backed by anything, and it's a faith-based system that's over-levered. And all these things are true, and I generally agree with them. I think that that's a very useful frame to look at the world from just an investor perspective, if you're a macro allocator. But I also believe that I don't necessarily have any edge in thinking about money crypto, right? Like there's a lot of really smart people in the world who think about macro all the time. And that's just not necessarily where we have an edge. But then tech crypto to me is all about how do we use permissionless open source blockchains in order to coordinate human beings to deliver something that was not possible before. I would even go so far as to say money crypto is kind of like a subset of tech crypto. It was like the first implementation or application for blockchains, but it's not the only one. And so the first thing that we did with this open source permissionless blockchain is like, oh, let's make digital gold. Let's make money that no one can take from you, right? But that's not the only thing that's going to be useful for. And the things that I get really excited about are, how does this enable everyday people to do things, not just, like central banks, right? I think the role of Bitcoin, if it's very successful, is that it's being held as collateral by central banks all around the world. And that's like the ultimate success case for Bitcoin, right? It's not that people are paying for stuff with Bitcoin every day. Like the blockchain isn't even designed to handle any of that stuff, right? Like Bitcoin is not meant to touch everyday people's lives because it's digital gold, right? And I'm really interested in the implementations of blockchain technology that affect everyday people's lives.
Yep. Yeah, that makes a lot of sense. And I'll come back to this after, but going back to this beginning of Multicoin, like what does it mean to put a fund together? Like let's say, I had a partner and I was like, all right, let's do a fund. How do you go about doing that? What's the process in the United States?
Oh, that's a good question. So the first thing you need to do is get a lawyer who has some familiarity with funds. You're going to need to decide if you want to do a hedge fund or a venture fund, and that has some trade-offs to it, both on fee structure and flexibility on what you can do and can't do, and also certain LPs or investors prefer one fund structure versus another. Then once you have the attorney working for you, and you draft up what's called a limited partnership agreement, and you also draft up a private placement memorandum, and you're able to then start marketing the fund to investors. It helps if you put in some of your own money, which we did, of course, and we also went to people who had invested in our last companies and wanted to come along for the ride with us again. Once you have that, then you also need to get what's called a fund administrator, which is basically think like the accounting and administration for your fund. They do things like calculate how much you made or lost in a month, et cetera. And then you need to get independent third-party auditors and tax professionals as well. And they check your administrator's work in order to make sure that everything is honest and above board. And then they also do all the tax preparation work for you. And those are the key service providers that you need to get started. And if you get those service providers in, you can run a fund with 2 people. Like, that's very possible. Now, can you deliver returns in this environment with how competitive the market is with just 2 people? Like, that's probably hard. But, from a legal and technical perspective, you can. You just need those service providers to be in place.
Got it. That makes a lot of sense. And when you guys started, beyond sort of this administrative framework that obviously you had to do, what was some of the core thesis for you guys? Or like, where did you say when you were speaking to investors that you wanted to allocate the money?
So we named the firm Multicoin Capital because back in 2017, when we were starting out, it was still a question of like, is there only one coin to rule them all? Or will there be many coins? Now the name is a little like anachronistic because it's obvious that there will be many coins. No one's really like, oh no, it's actually all going to come back to Bitcoin one day, right? Like that's just a laughable concept at this point, right? But when we were starting, it wasn't clear, right? And so we mainly went out to investors who had heard of Bitcoin and knew what Bitcoin was, and were like, hey, you're seeing all this other stuff happening. Like maybe you've heard of Ethereum, maybe you've heard of some of these other assets, and we will help you diligence those and get exposure to those in your portfolio, because there are going to be many different coins that are going to matter. And then we published a lot as well, right? We realized that the whole ecosystem was just like looking for those frameworks and heuristics I mentioned earlier, and they wanted to read stuff. They wanted people to tell them like, where to look and what's interesting. And so we started publishing like research reports on positions that we had or didn't have, and those got pretty popular. It helped us get some attention. We published, some broader theses there. We were also pretty polarizing on Twitter, wherever we could be. That would be my biggest advice. I tell this to all our portfolio companies as well at the early stages. And I would say this to anyone in the audience, like one of the best things you can do if you are just getting started is be polarizing, because the opposite of love is not hate, it's apathy. And when no one knows who you are, you need to get attention. Attention is the scarcest resource in the world today. And so I think that was one of the things that we did extremely well, is get attention. Because when we started, honestly, we were nobodies. We were just like two kids in Austin, Texas that had never run a fund before, hadn't started a crypto project. It's not like we were friends with Vitalik or, something like that. We had no business being in crypto really yet. We just showed up. But we were really driven. We focused on writing in public and thinking in public. We were not afraid to be wrong in public. And we were polarizing. And so we were able to attract attention, which was very valuable for us.
And back then, there weren't really many viable projects. I remember 2017, it was just kind of ICO after ICO. And as you were saying, people saying you'll use our token to buy the things within our system. And kind of that's all it was. How did you guys find, because I know even back then you guys found some of these pretty early on that have now developed into much bigger things. How did you go about doing that? Was it bets on teams or on the projects?
So I think we approach the world differently from a lot of other investors. I think a lot of investors are sitting there like they're on Tinder, and they look at a project as it comes across and they're like, do I swipe right or do I swipe left? And that's how they think about it. And it's a reactive frame to the world, right? And they're asking questions and stuff, obviously, and this works well for people. Some people are focused on the team that they're investing in. Some people are focused on the product they're investing in. Right? Everyone has their own strategy. For us, we're really thesis driven. And so what that means is we try to form a thesis on how this technology will evolve, or how this market will evolve, and what will happen. And we spend a bunch of time thinking about that without the context of an investment. It's not like there's an investment in front of us and we're thinking, is this a good one or not? We're just thinking oh, we have permissionless open source ledgers, and we have people trading stuff on these ledgers, and we have the ability to fork anything. And so how will fee capture evolve in this world? And just sit there and think about that for hours and hours and hours, right? And try to form a cohesive thesis on how that'll evolve. We write those down. That's really critically important. It's so easy to lie to yourself in your head or skip a step in your logic, when you're just thinking it, or when you're talking about it. And so we write everything down. We go through it with the rigor that is necessary to, publish it on our blog and get something, that's really tight. And then we try to find ways to invest in it, right? I tell our investment team this all the time. I'm like, hey, your job is not to go find new investments. I know you joined Multicoin on the investment team thinking you'd go out and find new investments, but that's not the primary job that I care about. The primary thing I care about is go form a thesis. And we just happen to monetize that truth-seeking behavior by investing. So we'll form a thesis and then we'll go out and we'll find the best way to express that thesis in the market. Or, when someone comes to us, we'll already have a thesis and we'll be able to decide very quickly. And so if you talk to some of the teams that we've invested with, we're really decisive. We really don't care what anyone else thinks, whether they're in the round or not, or, we just don't care, right? We have our thesis, we have conviction behind it, and we're ready to go.
And was this a learning process for you, or did you feel pretty prepared from the onset? Because, even for me, I haven't been working crypto for that long, about 2 years now, and it's every day I'm learning new stuff, and it's an overflow of information. Did you have to constantly be updating your mental models, or would just over time, synthesis became easier?
I don't know if it's gotten easier. We just have more context, right? Because these different theses and these different markets, they kind of interplay with each other,
right?
And they interact in interesting ways, and we just have more context on how that works. But forming a coherent thesis about a market is really hard. I don't know that we're necessarily better at it. When you're at the very forefront of something, you don't just like gradually get better. It's not like compounding. It's usually like a step function increase, right? The comparison I would draw is to athletes, where if you're an athlete at the very top of your game, usually it's not like every day you practice, you get a little bit better. No, you're practicing to like stay in form.
Yeah.
And the way you get better is you learn a new technique, right? Like you learn something new, and then there's a discrete jump where you get much better all at once. And then you kind of flatline again, right? And I think that investing is kind of like that. It's a sport. It's a competitive sport. And so I think there's a lot to be learned from how athletes improve.
Mhm.
We have made our fair share of mistakes that we've learned from, but that was more a refinement of like what not to do. And that's what led to some of the step function increases and our ability over the years. But I wouldn't say the core part of thesis formation has necessarily improved.
Mhm. And now you guys are in a very laudable place. Everyone recognizes you guys. Like, I feel like the haters all kind of shut up. But I want to hear a little bit about like the rough times when that bear market hit. Like, you guys started this fund, you had 3-4 months of up only, and then 2 years of down only. Yeah, tell me a little bit about it. Like, how did you guys manage? How do you keep the conviction to keep like shooting through this all?
Oh, it was brutal. It was absolutely brutal, right? Because we went out, we raised all this money, we brought on, all these prominent investors, right? Like we brought on all these like notable VCs. These were people who I was reading about, and I was like, oh wow, I get to like actually work with some of these people now, right? We announced in early 2018 that like David Sachs had invested, and Fred Wilson had invested, and like Mark Andreessen had invested, and like some of these like amazing people. And to go and lose them money, like really feels horrible. You're just like, oh my God, like, it just like, it feels really bad, like viscerally, right? And we just knew that like this technology fundamentally was not going to go away. We knew that there is usually a trough of disillusionment, right? Where the market gets overexcited, then market crashes and all the tourists leave. And we saw all the tourists leave in 2018, all right? And they said, I don't care what price I get, like I'm just leaving, like none of the stuff works. This was just a bubble, it was a fad, I'm out. And we could see that happening, but we could see that the really talented builders were not leaving. They were staying, they were continuing to build. They saw what we saw. They saw that this technology was going to change the world. And so that gave us a lot of conviction to, double down and just keep going, is like, knowing that, most people don't know what they're talking about when it comes to markets at all. And so them leaving like is not actually information that matters for decision-making.
Mhm.
And knowing that the people who do really know what they're talking about were the builders, and they were betting their careers on this, and they were staying, and they were doubling down. And that's really where we got a lot of our conviction.
And something I should have probably asked earlier, but were you guys doing sort of lock token purchasing from the very beginning, or did you have like a liquid portfolio as well? Has that changed over time?
Yeah, so when we launched with just a hedge fund,
Mhm.
because everything was public in 2017. It was just like ICO and go.
Right.
There was no like private market, really. The concept of lockups didn't exist, which is kind of hilarious, right? Then in early 2018, we started doing our first locked token deals. The first big one that we did is we led the seed round in the graph,
Mhm.
and we created a side pocket in the hedge fund for it, because you can't just like leave in a liquid asset in a liquid hedge fund. It creates all these like asset liability mismatch problems and duration mismatch problems, right? So we put it in a side pocket, and we started to get some emails from our LPs who were like, hey, some of these deals that you're doing, that you're putting in side pockets, are really interesting. Could I get more exposure to those somehow? It's like, well, not really. Like in a hedge fund, you have to treat every investor like
Mm.
equally. right? You can't give one investor more of something and another investor less of it, right? Like that creates big problems. So what we did is we raised our first venture fund in the summer of 2018. We didn't even market that fund. We just went out to existing LPs in the hedge fund and asked them like, hey, if you wanted more exposure to illiquid stuff, come invest in the venture fund. And at this point, it had gotten pretty normal to have locked token rounds. And we started to see just like the crypto capital markets re-evolved a lot of concepts that exist in traditional capital markets, right? We're just speed running the lessons of the past 100 years in traditional finance in crypto, right? We're learning like, hey, you can't just like ICO and go, that's like, like listing something publicly and then just like everything's out there is going to create lots of problems. We learned, lockups matter. We also learned that VCs add value in a lot of cases, right? Turns out entrepreneurs in the traditional internet world weren't idiots who were just like raising money from VCs because they had to, or because they had no other choice. A lot of times you see successful founders who have their own capital go out and still raise from VCs, because turns out you need that external accountability from a professional investor to help keep you motivated and accountable in a lot of cases, and help you from falling prey to your blind spots. You need that signaling to the rest of the market as well, that a professional, sophisticated investor can bring you, that you putting your own money in or raising a bunch of money from retail just like simply does not bring that same signal to the market, right? Among several other things. And so we started to see that evolution of crypto capital markets. We evolved our funds along with that, and have made several changes along the history of the fund as crypto has continued to evolve.
You reminded me of the ICO directly to Binance listings, and like the charts just going like this over and over. Oh, dude, that was so wild. I bet those like first people from the venture fund are very, 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 very happy with you guys now. They were their bets paid off for them. So the graph is huge now, right? And I'm sure back then it still seemed kind of like a preposterous idea because there wasn't much happening on EVM chains beyond like the ICOs and like some very initial framework. I think ETHLend was like starting to build the first borrow lending and different things like that. What was kind of your guys' thought process around backing the seed of that? And because it seems like that may have been your first kind of like complete thesis lock token investment, right?
It was the first big one.
Mm-hmm.
I think we had done a couple of small ones before that, but not as notable. So our thesis for the graph was actually pretty straightforward. It was blockchains are databases. Everyone is focused on writing to the database,
Right.
but you're going to need to be able to read from the database as well. And there are multiple ways that you can set up the ability to read. Right. One is you can run your own node. I've never bought into the idea that users are going to run their own nodes. I think that's a load of crap. Like people don't do many things, right? Like people just accept what happens, right? Like also running a node takes a ton of resources. No one's gonna do that, right? So querying your own node, I think it was not going to work. Then the next thing was use a centralized service like Infura or Alchemy in order to query the blockchain. And that works pretty well, but it defeats the decentralization goals in many ways. You may have seen recently, Moxie Marlinspike, the founder of Signal, talked about his dive into Web3. Yeah. And he was just like, I went through and I played with these NFT things and I played with, some of these other apps, like these DeFi apps. And they just all keep querying, Infura or Alchemy. And those seem like companies. So what's the point of this blockchain thing again? Can we just send the data to these companies and can they block me? And you know what? He's right. And so when we saw the graph was a decentralized network of nodes that read data from blockchains for users in exchange for a fee.
Right.
And we're like, oh, this needs to exist, because if blockchains are going to be big, they're databases, and every single write to a database generates more than one read usually. right? Like think about it this way. If you have just 1,000 followers on Instagram or Twitter and you tweet one thing or post one picture and only 10% of your followers see it, that's 100 reads to one write,
Right.
right? So reads are a huge, huge part of this ecosystem. And so that was the core of our thesis for the graph.
Yeah, that makes a lot of sense. And I'd be curious to hear maybe, because this seems like that model of, here's a token that you use to pay for a service that you need for whatever you're doing on chain. And it seems like you guys have also backed a few of these quite heavily that have done well. I know like Helium is one of these. And I actually, especially wanted to ask you a little bit more about Helium because I understand it from like a base level, but I'm curious kind of how the dynamics work at scale and at the growth rate that it's having and whatnot.
Yeah, I mean, to start from the beginning on Helium, for some of the listeners, Helium is a new business model for deploying and managing communications networks.
Mm-hmm.
The first network that they started with was a low power IoT network. This is meant for sensors and other devices, things like flood sensors or fire sensors or location detecting sensors, et cetera, using a technology called LoRaWAN, which enables long battery life for these sensors. But the thing that made Helium really powerful was how they rolled out the network, right? Because when they started as a centralized company, and their thought was, we will sell these routers to people, they'll put them in their homes in order to help us create a network that can be used for IoT things. Turns out that doesn't really work very well because people need an incentive. They're like, why am I doing this? And no one cared. Then they realized that they just needed the network before people would build things on it. It's a chicken or egg problem. You can't have people using your network until it's like established and has broad coverage, but also no one wants to build out the network without the users. They're like, why am I doing this? What am I doing it for? So we were able to create a token model to incentivize solving that chicken or egg problem by saying like, hey, we'll use this thing called proof of coverage to reward miners who put up a hotspot, and they will earn tokens. You earn more tokens if you are earlier. So there's a bit of a race to it to try and get there faster and build out the network faster. And then we will have the network built out such that end devices can actually use that network because it provides reliable and inexpensive coverage. That worked out really well for the IoT network built on Helium. That network launched August 1st of 2019. So it's coming up on about 2.5 years, maybe 2 years, 9 months, something like that. And now there's about 700,000 of these hotspots around the world. Most of the major cities in the US, Canada, Western Europe are fully covered. A lot of cities in developing nations are also getting a lot of coverage. And the network has been a success on the demand side as well, with users like Lime Scooter using it to track location of scooters. Nestle is using it to track vending machine inventory, so they don't have to send the person out to go and refill the vending machine unless it's actually empty. Lots of interesting use cases like that. We've even seen municipal governments, like the city of San Jose, is using the network for some smart cities initiatives. So it's gotten pretty good traction in that sense. Now the network is expanding to additional technologies. The next thing that's going to be launched on the network is 5G. They've done a partnership with Dish Networks to work on 5G technology together. And I expect that there will be more communications networks launched on top of Helium in the near future as well.
Sweet. Yeah. Thank you for the breakdown. I really like these models of just like using tokens to incentivize people to create these effects. In your mind, would you say DeFi is just like, is DeFi money crypto, or is it tech crypto, or is it a convergence of both?
I think it's tech crypto.
Tech crypto.
Because it's tech crypto in the same way that, Robinhood is a tech company to me, not a like finance thing.
Mm-hmm.
To me, money crypto is just more about like Austrian economics versus
right.
Like Keynesian economics. So I definitely think DeFi is tech crypto. I think the future of DeFi is one where DeFi serves kind of as this global backend for liquidity and for these financial products. And I think that users will interact with that through small local institutions. I think that the future of DeFi is one where your local credit union or like community-owned bank can compete and offer the same products that JP Morgan or Goldman Sachs can, because you're all plugged into the same back end. But I think you're going to need that front end of just like, hello, I lost my password, please help me. Or, you're just going to need that ability to call someone and ask some questions. I don't think that goes away, but I do think DeFi helps even out the playing field. So that's technology that's enabling the leveling out of the playing field amongst all these different actors.
That makes a lot of sense. I mean, the reason I brought it up is just because it feels like Helium in the graph, like these token models are so much more interesting than just creating like an AMM and letting people farm and giving them yield incentives with the token. So it's really good to hear just like of projects who are actually developing potentially sustainable economies rather than just like trying to be liquidity vampires and get everyone to come over real quick. One more question on what you just said there for DeFi. So potentially it's just like base primitives and other application layers that necessarily aren't financial will tap into them for different services that the end users will use, something like that?
Yeah, that's what I'm thinking, right? I think that the big exchanges are going to be front ends for DeFi liquidity, because I think that is eventually it's going to be the place where people want to actually clear risk and settle on these transactions. I think that they're going to see that, I don't want to do that with a centralized institution. And I think that DeFi is going to become the most liquid market in the world. It's going to be more liquid than US equities. It's going to be more liquid than anything. And I think that that's because it's accessible to everybody in the world. There is no other market that is accessible to everybody. People don't realize, I think we're getting close to the point where more people own crypto than own equities in the world. I don't think people are doing that math. If you think about it, like how many people own equities in the world? Like 500 million? Maybe
Yeah,
like
mostly the States.
600?
Like a lot of other countries, people don't even own any stock at all.
None. But they do buy crypto in a lot of different countries. I would assume that we're up to something like 100 million crypto owners in the world, like on the order of, right?
I think that sounds right.
So
yeah,
that's not much longer in terms of the growth rate that crypto is at before there are more crypto owners in the world than there are shareholders. And I think that is going to be an amazing flippening. And I think that's why crypto capital markets and DeFi capital markets in particular will be the deepest, most liquid markets in the world.
Right, because anyone can participate in these. And how do you think the regulatory environment that we're seeing will like shape this? Because it seems like the current regulatory environment seems to have a push towards kind of grabbing this DeFi stuff and putting it under jurisdictions or frameworks that exist for other things. And then that might actually like block out places, supposedly, right? There's always like different ways to get around the front ends. But do you think that's what's going to happen, or do you have a sense there?
I do. I think that the regulatory decisions about crypto are no longer really going to be made by the regulators. I think they're going to be made by the politicians. I think that, the questions about crypto regulation will not be made by the SEC or the CFTC or any of these other agencies. I think they're going to be made by the Congress and the Senate. I think that crypto has achieved a level of awareness that this is now inherently political, not regulatory. And that really changes the game. I mean, we're seeing this with last year, we had the infrastructure bill, which was like the first piece of bipartisan legislation in God knows how many years, held up because they added a crypto rider to that bill. And crypto was enough to hold up that like thing that was the most highest priority thing for the whole country to be working on. Right. And it was held up by crypto for like a week or two while they figured out those things. Right. That's just a sign of what is happening. And I'm expecting more and more politicians to become crypto aware. And they're going to realize that their constituents like crypto. the only people who don't like crypto are the incumbents that are being disrupted. And so I think they will realize that banning crypto is popular amongst, the lobbyists, the banks, these old institutions, but voters don't like that. And at the end of the day, we live in a liberal democracy and voters get to say who is in charge. And I think that voters are going to vote for pro-crypto politicians.
Yeah, I think that sounds right, because voters don't like the incumbents at all. They've been getting kind of screwed by the incumbents most of their lives anyway. So I'm in agreement there.
In all kinds of ways, right? Like, no one's like, oh my God, I love Bank of America. No one says that, right? But like, people like using DeFi. Also, they own a piece of it. That makes them feel good. No one likes Comcast or T-Mobile, right? Like, no one likes, no one's like loving them, but they love Helium because they're like, oh, I own a piece of this because I'm a part of the network, right? And I think that changes everything. And the longer that we go, while user base of crypto keeps on compounding at these, really high rates, the harder it is to displace this stuff. And the more people are going to vote for it when elections come up.
Yeah, totally true. And we're seeing it with this groundswell of different PACs coming out of, like, crypto people who have money and want to support politicians that want to support crypto. And it's like, I think politicians will soon realize that, like, there's a lot of money in crypto that wants to make sure crypto stays a thing. And we'll have our own lobbying forces as well, which I think, got to fit into the system in some degrees to make it change, I guess.
Yeah, absolutely. I actually have another theory here, both related to the regulatory question and also kind of back to crypto capital markets. I think that every time we come up with a new mechanism to distribute tokens, it kicks off a bull market. And I think it also strengthens crypto's position from a regulatory perspective. I'll give you a few examples to make the point. I think the 2013 bull market was really driven by people realizing you can fork proof of work coins and make your own. There's a new mechanism for distributing tokens. I think 2017 was ICOs. There were, you couldn't distribute tokens through sales before, and then it became popular and got distributed, and we got many more holders of tokens through that. And I think, 2020 was really driven by DeFi liquidity mining. There's a new way to distribute tokens to more people. And they didn't need to buy the tokens. They could just get them for participating in the network. I think 2021 was NFTs, was a new way to distribute more tokens to new people. I think that there will continue to be more ways to distribute new tokens. I love investing in projects that find a new way to do that. And, Helium is one example amongst, many others that we have. And I think that when you do that, you expand how many people care about crypto. And I think that helps us from that political and regulatory front as well. So not only is it important, to like kick off growth in the ecosystem, but I also think it's really important to protect the ecosystem. So I think that's probably the highest and best use of a lot of crypto entrepreneurs' time, is like try and come up with a new token distribution mechanism, get more tokens in the hands of more people. And I think, if that's probably the single most important KPI for our industry as a whole.
Right, totally, because we're still so small and emergent that we just need as many people as possible playing here with us or participating. Totally agreed. So taking a step back and, let's go back to this bear market and this time of, like, things weren't going that great, but obviously that passed. I'd love to hear a little bit about kind of the climb out of that and where Multicoin finds itself now.
So we're in a pretty good spot. We're one of the bigger crypto investment firms out there. We really haven't strayed from our roots, though. We're not building an empire. We're not trying to do everything. We're not like adding, tons of people. We are still a relatively small team. We're 16 people today. We'll probably get up to 20. But really, the way I see Multicoin is not as a company, but more as like a sports team. And, I think it's a competitive space, and I think everyone who's on a championship team needs to be excellent. And I think that when you get bigger, that can start to be diluted, right? Now it enables you to do a lot more, but, the way that we look at success is not, what are all the capabilities that Multicoin has and like, what can we do? The way we look at success is how successful are our portfolio companies? Their success is our success. And so our goal is to just help them, right? And build together with them. And so that's really what we have focused our entire organization on. And that's why I don't expect that the team is going to grow all that much. The beauty of asset management, though, is that a business can scale without the team scaling in a big way. So we're fortunate to be in the business that we are.
Right, because as long as you have good picks that do well over time, doesn't matter how many people. Oh, well, like it's like the difference here, would you say, is purely in having enough people on your team to be able to help each individual project or something like that?
Yes, exactly. But also you have to realize, like, no entrepreneur wants to work with your B team or your C team, right?
Yeah.
Like they don't want that. So you can grow out your team and have 100 portfolio support people, but then, some of those are going to be B team, some of them are going to be C team. You don't have 100 portfolio support people who are all A team. That's just not true, right? You can say that it is, but it's not.
Yeah.
And so, the right thing for us to do is be selective, right? Like, we don't need to invest in everything. I think a lot of investors have FOMO. I think a lot of them are like, they're playing Pokemon. They got to catch them all, right? Right? Like and I think a lot of investors look at the world like, like they're building a collection, not a portfolio. They're like, oh, if that deal turns out to be really successful and makes a bunch of money and I'm not in it, my collection will be incomplete. Oh no. And I'm just like, I don't care. Like, that's okay, right? Like, you don't have to be in every deal that makes money. You don't. You should take concentrated positions in the investments where you really have conviction and where you can help and where you really care. And if other people make money on other deals, like, that's great. That's good for the whole world, right? Like, it's a positive sum game. It's not zero sum. And so we really try to avoid FOMO. We don't have gotta catch them all disease. And we only want to invest with teams that we want to work with, that we want to help support with the A team, right? Like, that's something we tell the entrepreneurs that we invest in, is like, you're not going to get the B team. There is no B team. We don't have enough people to do that. And so that you're getting the A team.
Right. Yeah. And having helped a good amount of companies, I know how much they value that. So that's pretty sweet for the teams that you guys are investing in. I have a question that, like, maybe there's some founders or builders listening. What are some things that now, if they come across your desk, you're like, okay, this is exciting. This is where I see crypto going, and you pay more attention, for example?
There's a few things there. I'm really interested in anything where crypto touches the real world, touches physical infrastructure, touches, people's lives in a real way. Helium was the first example of that. We also recently announced an investment in a protocol called Hive Mapper, which is a crowdsourced mapping protocol where people can upload their dash cam footage in order to create an always up-to-date street map where all the local business names and such are always up to date if anything changes or if there's any construction, et cetera. And that can affect the real world, especially in developing countries where there's very poor coverage from Apple and Google, and it's out of date all the time. We've also made a couple of other investments in that general theme that we haven't announced yet. But I'm really interested in things where crypto touches the real world. I'm very interested in things where crypto enables human coordination at a massive scale that wasn't previously possible. An example of that is something like data DAOs. So, my data alone, probably not worth all that much. Your data alone, probably not worth all that much. But if we can coordinate 1 million people to contribute their data for a certain purpose, that's worth a lot.
Yep.
I have experience on this from my last company that I founded, which worked, with patients' medical record data for clinical research purposes. And, we just saw how hard it was to collect that data to help the outcome. And what would be really cool is if you had some upside in, the insights that were driven from your data. And so you could actually get, some upside from that and participate in the value that you were creating. And so I think that's what data DAOs can enable. So we're really interested in that kind of sector of the world. We continue to be very interested in things in DeFi as well. I know, a lot of investors seem to have gotten kind of bored of DeFi, but that just reminds me of like 2018, 2019 for smart contract platforms and other essential crypto infrastructure, right? We saw in 2020 what DeFi was capable of and how people could get excited about it, and it's kind of just been like compounding on a technical basis. People have been building and shipping code, but the market hasn't yet realized that this enables them to do something that they couldn't otherwise do. Like the experience just isn't like quite there yet, but I think it will be. And so we continue to be really interested in DeFi, specifically things that make DeFi more capital efficient. I think a lot of DeFi is built on massive amounts of collateralization or massive amounts of latent assets sitting in like an AMM pool. And I think the future of DeFi is capital efficiency. So really interested in that general sector. And then we're also interested in things that deal with digital realities or metaverses. Generally, I don't think anyone knows what a metaverse is yet. I think it's really hard to reason about. This feels very early in that part of the world. But I do think that we're going to spend a larger and larger percentage of our time in digital worlds. And I think people are going to want to own things in those digital worlds where they are spending time. And I think that blockchain is going to be the thing that powers that.
Yep, I'm in agreement. Thank you for sharing. 2 more questions for you, Tushar. First one is, if you had to give someone advice to join the space, what would you tell them?
That's a good question. It depends on who they are, really, right? So let me break down some archetypes, right? You have the technical people who want to join the space, who have had engineering jobs and are just interested. They see what's going on in Web3. They see all of their other friends who left their traditional tech jobs and joined Web3, like made way more money than them and are having a lot more fun, right? And so I would tell those people, it's probably best to go join an established project first and build your network in the community, build relationships, get all of the context. Crypto has so much context and so much history, and you need that in order to be productive. Like you need to understand why things are the way they are, right? And then get that, and then go try to found something of your own, right? Go, like the beauty of crypto is that you can have a team of like 10 people who've built $1 billion enterprise. There's multiple teams in the Multicoin portfolio that, it's like 10 people working together. They built something that's worth $1 billion. Incredible, right? That kind of leverage is impossible to find anywhere else in the world. I don't think there's anything else in the world that compares. And so I would encourage those people to then go found something of their own, because you can do that with such small teams. To the non-technical people, I would give similar advice, but I would tell them one additional thing, which is start writing, right? Like technical people can write code, but you can write, prose and just write what you think. Be wrong in public. Be willing to be wrong in public. It's fine. Like I've been wrong in public many times. It's worked out okay. I promise you it's okay. Like you can be wrong in public. And just like get your opinions out there, start thinking critically about these things, form contrarian views, and get people to start paying attention to you. Because later on, that's what is going to differentiate you, especially if you're looking to eventually go and found something. And you find a technical co-founder, like what they're going to expect from you as the non-technical person is that you can communicate, you can build a community, you can attract attention. And so start practicing that now.
Yep, that makes a lot of sense. And the last question for you, Tushar, or actually, if you have some time, I'll do 2 more because I have one other one. First one is, say the wild optimistic dreams come true and crypto becomes everything that you expected or hoped for it to become. What does that look like?
That's an interesting question. I think a lot of it is going to look like what I was describing about DeFi, where I think blockchains become this global backend for all of these systems that tie the world together and tie people together and tie the economy together. And I think that they provide this fair platform an open platform for local businesses and small businesses to be built on top, where a small business can now compete with big businesses in today's age, right? Because if you think about it, like, I think one of the biggest things blockchains do is that they reduce the returns to scale for their market participants. An example of this would be, let's compare how Serum works to how the CME works or how NASDAQ works, right? On CME or NASDAQ, there's huge returns to scale because you want to be one of the big traders because you can pay for the data. The data is critical. Without it, like, how are you going to trade? Like, you're just like firing off orders blind into an order book. Like, what a concept, right? And so you need to have this scale in order to compete. And if you just start, like, you can't, like, you just don't have access to the same stuff. Versus Serum, everything's on chain. Everyone has access to all of the same information. And so now you and like 3 of your friends or whatever can go off and start a trading firm, and you're competing on the same even playing field with huge trading firms, right? And that's just one example of how I think small businesses end up becoming more prevalent, because I think people naturally want to work together in small teams with people that they really care about, that have meaningful relationships with. And I think that they're forced to go and work for huge institutions because of these returns to scale that these institutions have. But if we can remove those returns to scale, I think that can lead to people having much more enjoyable professional lives, because they work with people that they care about on problems that they care about, and they aren't forced into these huge bundles of institutions. I also think that this type of freedom will translate not only to the people who work in crypto, but also to the people who don't, because they will be able to access all these products and services, no matter who they are, no matter where they are, right? And I think that matters a lot. An example I'll give, this is a simple example. Like, I have a cousin who's in India, he's an engineer, he really loves everything that Google makes, and he wanted to invest some of his savings into Google stock, and he just can't. Like, he doesn't have enough money to get a foreign brokerage account. He doesn't have the freedom to participate in those capital markets. He's unable to. And I think that blockchain will make that possible. I think the ultimate goal of all of this technology that we're working on is to increase the net amount of human freedom in the world. And I think that is both true on the career side as well as from the consumer side. And that's kind of our core mission at Multicoin, is do things that help increase net human freedom through crypto.
Amen to crypto freedom, baby. My last question for you, and that's awesome. I'm just totally on the same page. My last question for you, Tushar, is there a habit or life lesson that stands out amongst many that has helped you live a better life?
Oh yeah, there's several, but I think the most important has to be think for yourself and don't take things that other people say or do or think for granted, no matter how much you respect them or how smart they are or how successful they are. You really need to form your own opinions. That has been the most important thing for me in my life in terms of setting it apart and allowing me to do the things that I've done, has been think for yourself, because one, it allows you to challenge commonly held beliefs that aren't true, or allows you to find truth that other people don't know. But then two, and very importantly, it allows you to have conviction in those because you derived it yourself. It's not because that's the way it's always been done or that's what someone told me, and so that's why I think this. It's no, I went through the process of steps and I derived this myself. And so therefore I really truly believe it. And I think that there's a big difference there. A lot of people have what I call crony beliefs. They believe it because it's convenient for them to believe it, or because someone told them to believe it, not because they actually believe it. And so I would seek to find your crony beliefs and eliminate them and replace them with true beliefs.
Thank you for sharing that. And thank you for coming on the FTX podcast.
Thanks for having me.